So, hello, and a massive hello to everybody. Hope everybody's having a great day wherever you are, whatever you may be doing. 50 pips, rocking and rolling here, 9th of February, 2025. No trade calls, no recommendations, or responsible for their own stuff. We're here for educational purpose only. So, here for another Substack video. I'm going to continue doing these as it seems people enjoy them. As always, this is just a technical look. I'm trying not to give you any kind of bias, just looking at the levels. If you want to look more detailed view, you could sign up for the weekly outlook video and those update videos. But here we're just trying to be very, very simple in the way we look at the market. So here, what I've got up on the screen is basically Magnificent Seven. So Apple, Tesla, Facebook, Google, NVDA, Amazon, and Microsoft. I think this is a key chart across the board, and it's an interesting one to review, and also an interesting one for people to keep an eye out for if they want to have a feel for the market, if they want to use it as a control chart, simply because of the weight of these names, the weight in the indices, the weight in a lot of the ETFs, etc., right? So basically, what would I be looking at here on this chart? What would catch my eye? So one of the first things I would draw is basically this closing high here. It's a big pivotal level. And basically we sold off fairly hard off this level. Once we came back, the market stalled, tried to consolidate, didn't know what to do. Then we, kind of tried to break up, fell back down, and then the election came and we had this big ramp, right? So the two things that catch my attention is, first of all, this pivotal level, as I said, because it's so key, and then the election ramp, which I would draw up on the chart because I'd want to have this up, right, to remember what happened. Now, what happened after the election ramp? So we stalled a little bit and then we popped higher, right? What's interesting here is, right, in this consolidation, it's kind of similar to what's happening on some of the indices, right? We had this whole series of lower highs and lower lows. Then the market tried to ramp up again, but we couldn't take out this high, okay? So a lot of people would be looking at this whole zone in a lot of different ways, drawing different kind of patterns. The way I like to look at these is, as we've seen in the latest videos, is I look at it as a range, right? So what basically I would, you could just roughly eyeballing it, range high and range low, okay? Now what that means is, to me, essentially, anything that happens inside this area, even though you can make money, you can lose money inside this area, I call this basically, this is kind of like an amber zone, right? To me, this becomes very, very neutral. Unless we have significant, important information that attracts aggressive new buyers above or aggressive new sellers below, this is just a chop range. And likely, I think the market and everything that's correlated is going to have a hard time really getting traction one way or the other as long as this chart is stuck inside that neutral zone. Now, what's interesting is if you look back to the left, right, once we've drawn this this range, you can see that the low is in line with that election ramp up. So basically previous resistance acting as support to try and hold this high, but clearly the market is struggling with this lower high. So the way I'd look at this chart here is these become two huge pivotal levels. Now, of course, as long as we trade inside this range, it's just a range trade. And the most interesting opportunities are going to be at the range high or the range low. That's where you have a lot of asymmetry. And then a lot of people like to play in the middle of the range. I'm not such a fan of trading in the middle of the range, but these are, highs and lows of the range is where key asymmetry is, both for breakout or reversal, both for reversal or breakdown trades. That's really where the nicest trades are. So these two levels are huge, big levels, right? So what that means is, again, tactical range trade, very, very neutral kind of action, much to do about nothing, no real information that could help us to derive, broader market outlooks or snowball effects on other charts. As long as we're inside that, above that means that, we have a huge break, any new high possible. Even if we break above, the bears are going to be talking about explosive action for a blow off top, but it could easily just be a sustained grind higher for another couple of years. You just don't know. The only thing you really know above there, and unless it fails, is that this is new highs are bullish, and this is likely any new high possible ripping higher. And the other interesting thing is watch out below, because if we break below that area and we attract new sellers, basically your base case assumption needs to be that we're coming back into this election pump, and this whole move has to be unwound and potentially very, very quickly. And that means back into this pivotal level and all the way back down into that election ramp low, which is, funnily enough, tying in with the 200 DMA, which basically is giving us a lot of confluence. And as usual in technical analysis, when you have a lot of confluences at certain levels, they tend to attract, they tend to, self-fulfilling prophecies, and they tend to be magnets. So this is the way I would be looking at this, understanding that this is a key chart, and this is really going to help you as a control chart, looking at everything else that is happening in the market. So again, you can have your bias on which way you think it's going to turn. Clearly, if you look at post earnings, right, all these big names haven't managed to catch a bid, so it's a little bit shaky. But I can't stress this enough. It's very easy to be influenced and have a bias, and you could very eloquently argue for the fact that this is coiling, this is super bullish, and you could equally say that this is really struggling. Retail seems to be aggressively buying, institutions seem to be deleveraging, it's really struggling, it needs to test the downside. All you know, really, because after the fact, everybody's a genius, but all we know is that this is the range, this is mid, this is the top end, this is the bottom end, and this, as long as we're here, it's really messy, and outside it could really get traction and become a lot more interesting to put bigger swings on. But as long as we're here, it's just a range trade, and you can take high, mid, and low as short-term bull bear lines to set up trades both sides. Okay, hope this was useful. Wishing everybody an awesome week ahead. All the best. Take care, guys. Bye-bye.